It's Harry Box, the technical trader from TradeOutLoud.com. We're going to talk today about how I use certain technical indicators in my day and swing trading. I do believe that obviously the technicals are the key to trading. I am not a fundamentalist. Do I follow fundamentals? If I'm interested in the stock for a longer term position, I do. But normally, because I'm so in and out, day trading, swing trading, that I follow the technicals pretty much only. There's guys in my room. I have hundreds of people in the room with me every day at TradeOutLoud.com. Let me just show you that quickly. This is our technical trading room. If you log into it and sign in and sign up, you'll see our trading room with dozens and dozens and dozens of people contributing. And yours truly also, there's a picture of me right there. On the left side, I'm constantly giving people updates, new trades. Late in the day, we posted, I think it was AEHR, and that thing, I will show you what that did at the end of the day. It was pretty phenomenal move.
Hey, Harry, we're still seeing the PowerPoint. Or
you? Oh, really? Well, so I can't move into the screen. All right.
Well, you're sharing just that window. You need to share the whole screen if you want to.
Well, let me ask you a question, because this is what I wanted to show everybody. Do you see this?
I'm seeing the PowerPoint still.
How about this one?
No, you. Oh. Yeah. Now I'm seeing.
This is my trading room.
Yeah. Okay.
I wanted everybody to see that, just to get an idea. The main page showing what we give everybody: day and swing trade alerts throughout the session, live intraday webcast and chart analysis, minute by minute market analysis by yours truly, live trading room chat with not only myself but any member you can talk to, a very trackable swing trading list, a nightly video every night called the charts of the day, and a weekend in-depth hour-long video of going over all the charts and indicators. That's what I offer, and there's a 10-day free trial at all times. Please sign in, log in, and enjoy for 2 weeks for free. Okay. Got to get back to where I was. So what I wanted to do today to show you guys is talk about profitable day and swing trading using these technical indicators. I'm a big pattern recognition guy. I use price and volume surges and pattern recognition to catch all the big moves that we get every day. I can show you examples. Today was a stellar day at TradeOutLoud.com. We had at least 8 or 9 day trades that worked out fabulously. I can show them to you a little later, but we're talking about technical indicators today. I want to talk to you about some of the indicators that I follow that are very useful. The first one is, we're calling this the volume buzz indicator. Now, there is nothing in Wall Street that I know of that can compare to this indicator, because it tells you at any one time in the day, just read it, at any given point in the trading day, the technical indicator will look back at over a previous 100 days, normalize the volume at that point in the day, that second of the day, that minute of the day, and then makes a comparison of that point in time with the volume norm in that room over the last 100 days at that point in time. In other words, 15 minutes after the opening, we can compare what the volume is that day compared to what it was on an average of the last 100 days. It's very cool. And when you actually see the charts, you'll see that the volume percent gains on some of these stocks are amazing. Now, one second, I want to share something else with you. Oh, David, I'm not seeing it on my screen, so that's going to be tough to do. But can you see my charts right now?
Yeah, it says Gush.
Okay, good. So the point is that at the end of the day, and unfortunately the day's over, but see where it says buzz here? This is post buzz. The post buzz is what volume is after hours. Had I done this during the day, you would see 1,200%, 3,000%, 1,500%, or 5,000, even 20,000. Today, CEMI traded 361 million shares. We traded it after it popped from the get-go right in here. milked it for most of the way, all the way up into that near 7 range, when I told everybody that really need to take your profits, this thing's overextended. And then it came down and broke out again. There was a little trade in here when it broke out above that range. We traded it up from about 630 back up to 695 for a scalp trade. And then it rolled over. I told everybody when I saw that bear flag to exit the trade. That's just an example of the stock, but this one had 350,000% more volume than average today, trading 361 million shares. So I find volume buzz to be one of the most amazing indicators because it shows, number one, where early money is flowing. The amount of volume that's coming into a stock compared to what it was of an average over the last 100 days is a great indicator for everyone. And if you don't use TC2000, I believe this is a proprietary indicator that is only theirs. Nobody else I've seen uses it, but it is one of the most, for me, powerful indicators you could possibly use on a day trade basis, because from the get-go, it shows you how much volume is trading and how powerful that volume is. Now, a lot of people look at news related to what that volume is. That's fine. And the only reason I'm interested in news at any point is when it's pre-market, when the stock's popping like it did here. Matter of fact, I don't think this has pre-market. Hang on a sec. Okay, there you go. So this is what happened pre-market on CEMI. It exploded. It pulled back and coiled. And at that point, this was trading 15 million shares pre-market. It never trades that in a month, maybe even 6 months. I'm not kidding. This is a thin stock. So today, when the market opened, it popped and pulled back. What you don't see on the chart I just showed you was that this was the key right there. When it broke out with that bar, a huge volume bar, trading that moment, 4 million shares in a minute on this stock on the breakout, followed by a little pullback. When I saw that going right there, this is where we got in today at about 4.25. It flagged, it exploded. I got a lot of people out on that run up, and the people that didn't, and I told them to stop it right underneath there, but did not break that stop, came down close and then exploded again, and literally went from 5 to 695, 2 more points. And that took 20 minutes. So here's a stock that went literally from under 4 to nearly 7 for 3 points in about 40 minutes. Then pulled back in a perfect 3-wave corrective falling wedge from the little rounding base, broke out there. But it double topped and then got slapped in 1, 2, 3, 4, 5-wave decline, which is normal for a stock. And at this point, I would tell my people to watch for a move over 565, because if it takes that out, it might take out that zone and run right back up again. So one of the reasons I follow Volume Buzz, you could look at it on Neuro too, is a great chart. Look at Neuro on Friday. The Volume Buzz was monstrous. What happened is on Friday, it popped and formed a little coil. And when it broke out, we went long here. Going long a stock at 495 and watching it go up to, I think there was 12. And then after hours, flying. And then this morning, take a look at this. The market opened there. It immediately popped and was halted. When it popped again and was halted, I told people, buy the stock on this pullback because it's not done yet. Well, it exploded right there on 760,000 shares for $3.75, and then stopped again and again and again until finally you had a reversal bar, at which point I told everybody to get out. It then gapped down, and you can see the rest of the day flittered away. There was one trading opportunity in here where it broke out, but it didn't get that much going, and it halted at the gap. See this big gap in here? 1, 2, 3 attempts to get through. When I saw that fail right there, I knew this was done, and it certainly was. So that's a couple of, and by the way, the volume on that one was huge, like 200,000% more volume. When you see that kind of a thrust on volume, another one today was NSP. It popped up and pulled back and formed a coil. And when this coil broke out right about there, right there was a breakout. I put my traders in. There was a little scalp there and another pullback, but noticed that the line was not broken. So I told everybody to stay the course. And then it broke out and exploded and literally went from 5 to almost 7. Very quick move in about 40 minutes. But we got to get out of these stocks. They're momentum plays, and momentum plays can make you a lot of money very quickly. In this case, 35, 40% in less than an hour. In the case of CEMI today, it literally went up from 4 to 7, about 75% in about an hour and a half. Those are the kind of trades we want. One of our better trades today was Saba. When it popped and wedged and broke out right there, I put a day trade on at about 97.5 with a target of 104 and 111. So we hit 104.97 here. We hit 111.49 there. We wedged and broke out again. I said, now your target's 117.19 and 122. We hit 116.43 there and 120.75 there. So not quite those targets, but a lot of room to make money on this one today. One of our better trades today was DQ. Now, this is a perfect example of a perfect day trade. Why? Because, first of all, it explodes from the opening and then forms a little coil. There's your breakout right there. Volume picks up. Notice the low volume ebb, a phrase I coined many years ago. When a stock is very quiet near the apex of a flag or a coil, and the volume is very quiet. It's like when the tide goes out and stalls for a minute and then comes back in. That's ebb tide. Well, this is a low volume ebb, and that volume pops. Usually it triggers a good move. Well, the volume popped big time right in there. And literally the stock went from 69.5 to my target of 77, hitting 79 and change. I said it could reach 80. It reached 79.67 and then pulled back down. And after hours, it's trading strongly again. But this is the kind of technicals and indicators I look for. In addition, in this case, for example, these moving averages, by the way, are the 10, 21, and 50-day moving average. That is in green, white, and red. This white dashed line is the VWAP. We'll get to that later. And so there's many examples on day trades of what that gives you. MRIN popped and formed a falling wedge, and when it broke out there, and then formed a little flag that says where we went long. That was about 8.5. It then popped to, looks like 9.35, by 85 cents. And when I saw this little wedgie forming again, I said, if they take out this wedge and then go through a double top, it can go vertical. That's exactly what it did. Spiked from 9 to 11.98. That's 3 points, literally in 15 minutes. Not even that, maybe 12 minutes. And at which point I told everybody, sell the spike, look at the heavy volume. Usually when multiple waves occur, 1, 2, 3, 4, 5, and the fifth wave especially comes with big volume, followed by a reversal bar, you better get out of town fast. 1, 2, 3, 4, 5 waves later, the stock's back to 9 from nearly 12. So you got to be quick and dirty at TechTrader.com, but I will give you guidance all along, all the way, keep you in the loop as to what's going on. Here's another perfect example, a company called Xair, which popped and then pulled back and started to trend, but it never broke the trend line, at least not early on. And then it went laterally like that. And a massive 1, 2, 3, 4, 5 wave move, followed by a retest and then a rollover. But eventually, where we went in on this stock at 7.5, it made it all the way up to 9.30. That's $1.80 on a $7 stock, or about 22%. That's what kind of trades we look for at TechTrader.com. So a lot of that is based on buy and buzz too. When I see the stock early on in the morning trading, 5 to 10 times at least more volume than average early on, I'm interested. And if the pattern's there, I'm very interested, to the point where I'll recommend it. Take a look at the run up and the beautiful bull coil, and then the breakout right there. That's where we really got excited about it and watched it run from 7.75 to 9.25. But there were so many today that did that. It was one of those days. BTU was a perfect example. The stock started out the day pre-market with this kind of a pop. At about 9:30, right there, it broke out. And we put a day trend on it at 9:60. My targets were 10, 10.45, and 10.75. The high, 10.82. Then the pullback and consolidation. But the volume buzz, when this popped right there, got real strong, and then it pulled back and formed a wedge and retested and then broke out right there. So you can see that this strong move on BTU, and by the way, this has done this several times, here, and now for the third day in a row, BTU became a tech trader day trade. Let's talk about moving averages, because I can tell you right now that the number one favorite thing for me is crossovers on moving averages. When the stock pops initially, like here, for example, if you look closely, you'll see that the dotted lines all crossed over right there as the stock popped up and pulled back. Even then it popped up and pulled back, but it's above the moving averages, which are rising exponentially, I mean, really sharply. That shows that how strong the trend is. So moving average crossovers to me, when a 10, 21, and 50 period moving average, obviously a 1 minute chart, they're not 50 days or 50 minutes, but no difference, because I find the technical indicators work on all time frames. Something that's tried and true, like moving average crossovers, MACD, stochastics, any of that stuff work on all time frames. More so on daily charts, but the moving average crossovers work great on intraday charts. And these are all 1 minute charts for those of you who don't know. If you look up here, you'll see 1 minute M. This is 2 minutes. 2 minutes to give you a better picture with a pop, coil, pop, falling wedge, and then a retest, pull back again. Now, if you look at the long-term pattern over a swing period, multiple sessions, you'll see 1, 2, 3, and this is 4. The fourth wave has come right down to the prior high and to the 50-period moving average on the 15-minute chart. So in theory, what I would then do with this is go like that. I draw my channel off the lows. And basically, we got close to a parallel channel. Obviously, you don't want it to go any further than 5 on the downside. You can stop it for 15-cent loss if it doesn't work. But if it does work, it can be 6, 6 1/4, 7. And if it gets to that level, the double top there, we're looking at 835 and 10.5. So a double from here, if it pops with volume and gets to initial resistance for starters, which have to be above, and I wouldn't touch it until, in my opinion, it gets above 5 3/4 with volume. Part of what I always look for is big volume thrusts for day trades in particular, but for swing trades, I look for 5 waves, 1, 2, 3, 4, 5th wave. So if I was going to give you a swing trade on CEMI, my targets would be 7, 835, and 10.5. So again, the moving average crossovers work best. Here's all these crossing over a couple of days ago. But to me, it's much more effective intraday when you're looking for moving average crossovers to the upside and even to the downside. Here's some crossing over to the downside. See them? When they crossed over right there and came back up and couldn't get through and formed a bear flag, this is where I said, get out. Most of my people got out in the 6.5 range and watched it go down to 510. So it's very useful. Now, the other thing is the moving averages, again, work on all time frames. And I really feel like more people do not follow moving average crossovers. That's it. Very much of a key. Everyone talks about VWAP, volume weighted average price. I included on all my charts. This dotted line here is volume weighted average price. It's amazing to me when you look at winners, how a stock will form will follow the moving average, or will stay above it until it breaks down, of course. But when it accelerates like that, too far away from it, like anything else, it's time to sell. But on a normal trend, following the moving average weighted price, the VWAP, you'll find that it stays above it. It stays above it, above it, above it, and then it gets too far away from it, like anything else, like Bollinger Band. And by the way, VWAPs and Bollinger Bands are similar. I think VWAPs were derived from Bollinger Band. I know John Bollinger is a great guy, smart man, lives in California, Manhattan Beach, and he's a brilliant man when it comes to technical indicators. And he invented that many, many years ago. The Bollinger Band is simply overbought, oversold with a 80 and 20, 80 overbought, 20 oversold, and then you have middle bands and stuff like that. I'm not going to go into a long dissertation about Bollinger Bands, but because I don't really use them like I do VWAPs and other indicators of note. But I think the volume weighted average price, many times intraday, you find a stock come down to it like it did here. And if it then breaks down, that's where your stop is. Or breaks out above the VWAP, like here it's breaking out above the VWAP. Notice how it's holding it, and then spikes up. In the case of Saba, the VWAP was right there. See the dotted line? And it just kept going above it, hold it all the way up. And even then in the afternoon, this is kind of key for me. It broke price support slightly right there, but it held the VWAP and reversed. Now It's forming an after hours rising set. We call it an ascending bull coil or pennant. You can see where the resistance is. You're scrolling on it. This is a spike off the VWAP. I pull back to the 50. This is a three-wave corrected little mini wedge right here. It popped out to resistance and then formed this. Notice how the red line, which is the 50-period moving average, is holding it. And notice how that the 21-day is right on it there. So if this should do a late pop above, say, 118, this could run up to 120 to 122 for a little day trade scalper play. At least, in my opinion, as hot as this stock is, wouldn't shock me to see a test of 121 and through that 127. So that was some examples of how VWAPs work, volume weighted average prices, especially in the beginning of a trend. If they tend to hold them, and then they start to accelerate away from them. Let's talk about balance of power, money stream, et cetera. These are two technical indicators by the Warden brothers down here. Balance of power and money stream are similar to stochastics, ADX, things of that nature. They're oscillators in a way. They show confirmation of the trend. Much more viable on day trades. When you're looking at, you want to see the this green as you can get during rising trends. And interesting, when a stock pulls back and it stays green, it's a very good indicator it's going to come back, and it did. So indicators such as these, and this is also in addition to the volume buzz, the balance of power and money stream are three indicators that Warden Brothers and TC2000 came up with years ago and have refined it over and over. They're excellent. I highly recommend you use them, particularly on day and swing trades, on daily charts and 15-minute charts, which I use 15-minute charts for swing trading. So that is my little blurb on those two. Now, I'm not going to go into depth on it because we don't have a lot of time today, but I do want to know, I want everyone to know that I think if I've been using TC2000 since it's 25, now it's 28 years, 28 years ago, and I'm a preferred analyst for them. I love black backgrounds with colored bars that show me up and down bars. They're very crisp. And the technical indicators and the scans that you can use that they have built in are fabulous. By the way, the software can be downloaded for free, no charge, but obviously there's a catch and you have to use their data stream, which is about $85 a month. The bargain of the century, this is, in my opinion. I've come up with day after day dozens of winners. And I wanted to just show you a couple more from today. In addition to CEMI, which was a beauty, and NURO, NSPR popped early, pulled back, and I gave a day trade on it. It didn't work great early on, but it never broke down. And by the end of the day, exploded from about 485 to get up to 685. $2 run, it was worth the wait. Sometimes you get a stock pop and pull back, and there's your breakout. That's where I put a day trade on it, on LAXX. Went from about 940 and exploded to 1250. $3, and I mean fast, for fading. All of that based on a volume surge and unbalanced volume. And MRIN, we just showed you that one. It's a broke out, brought the double top. After it popped early on, it consolidated and wedged. And, you know, these are, look, I'm a pattern recognition guy. I recognize patterns that I show them to my people all day. But just so you know that I come on the air every morning at 10 minutes after 5 o'clock a.m. in Los Angeles. Oh, actually, that's not true. That's when I come on the air. I'm actually on the site at 4 o'clock. So I spend an hour doing research, going over charts and coming up with what we call a focus list. And then at 5:10, I do a video and present that focus list to everybody and show them the charts pre-market, show them what the patterns look like, how stock's setting up, whether they're breaking out over any major resistance levels, and whether it's a key technical breakout or not, and what the volume looks like even pre-market, so that we can get an indicator of the power of this potential of the move to be a day trade or not. Then I come on and I go over those charts and spend about an hour with going over each chart, each individual stock, where I show you support, resistance, and targets on each of them and indicate that they are on a watch list or a closely watched list for when we start to trade on the opening. Now you can trade based on my technicals pre-market. Obviously, treacherous enough pre-market, and you're on your own. But I'll always give you guidance whenever you need it, and you can always private message me, and I can give you individual guidance as well. Okay. I'm just getting that this stock is breaking out after hours. What one of my people just texted me. EYES exploding. Now take a look at this. This is my favorite pattern. Eyes popped on news that there was some kind of a European patent. So he popped up just for 1 minute. I don't trust 1 minute, but look at the volume on it. A little wedge form. This is a 1 minute bar before the close where 400,000 short traded in a minute, almost a whole day's volume. And it exploded and ran and just kept going. Formed a wedge here. This is right after the market closed. And then just went vertical from 4.25 to 5. This is how we catch trades, looking for volume, price, and chart pattern indicators that work for us. Look at DQ after hours forming a little flag in there. Some of the traders in my room are just not done till 8 o'clock at night Eastern. They all trade after hours, and we got a lot of winners every day. ENDP. Now, a very choppy stock, and this is 2 days now. Yesterday did this. I'm sorry, that's today. It exploded vertically and then formed a coil, at which point I said this is a buy at about 410, I believe. When it did break out, it went to 459 and then backed off and coiled for hours until exploding right after 2 o'clock to get up to 490 from where we first got you in at about 410 for a nice 80 cents or 20% trade. But you had to be patient on this one. Nevertheless, take a look at the VWAP, how it held on the pullback here, several times there, and then finally broke down through it and got back above it and kept going. So you have to always make a determination what technicals are telling you what. You can't go by just one. The combination of patterns, moving averages, price support, trend lines, VWAP, et cetera, all that is going to be very fruitful for you in your day trading every day. You come into the TechTrader.com, I'll pretty much guarantee you, not guarantee you, but I'll tell you that the probabilities of you making a lot of money in the first couple, the weeks of trial, it should be able to pay for a year of service. All right, one more to look at, and then we'll move on to the next indicator. AVPT. This is pre-market, and that's post-open. Post. Notice how this stock opens right at 9:30, about 10:40, pops and forms a little wedge. This is what got my notice right there today. I also knew that Goldman and a few other companies had put out buys on it. So when it broke out right there, I put a buy on it around 1080. Within 20 minutes, it was 1138. It pulled back, and then within a couple hours, it was 1170 for about 90 cents, about a 9% trade, 10%. And it's coiling. Now look at this coil and its setup, and notice where the VWAP is. Comes down above it, above it, above it. It's holding this line, holding the VWAP right there as well. So that's the use of the VWAP, the volume weighted average price. Now, I want to talk about balance of power and unbalanced volume too. To me, volume is key. Stock is no good without volume, and it's obviously volume is no good without price. We need to have both. When you see price and volume surge, like it did here and breaks out, you always got a good chance of extending, particularly in the morning here. But this wasn't that much volume in the morning, but it was good volume. All the green bars in there. It was one red, really good bar right there. It tried to reverse and just kept going. So, but what I do is my webinar is open all day. You'll see me moving and drawing my lines and moving my channel angles and stuff like that. And then I'll come on every hour or so and give you an update and go over all the charts of the stocks we're watching and or trading and give you updates constantly in the website about, with a comment about raise your stop here, this is your new target, et cetera, et cetera. The key to volume though, for me, OBV, unbalanced volume is the dotted line and volume is the regular But I want to see stocks that in a consolidation or pullback, the OBV is improving or at least flattened out without going down. That's a positive movement. Most stocks, when they're trending, the OBV is moving up. It's always interesting to look at it this way. So this morning when I saw DQ, and I like this company, this is one of the biggest Chinese semiconductor stocks, if not the largest, broke through there with big volume and pulled back and formed a coil. It got very quiet. As soon as I saw the volume pop, I put out a buy right there at 70.5, 3/4 in that range. And this is what it did right after. Just kept going all day until it spiked to 77 3/4, which was a target of mine. And that was right at channel top. And then it did this. It extended after forming a wedge or a coil. And then took a dip, but held lateral support at these levels here. That's where I told them to stop it if it broke down underneath, say, 76.5. And then it came right back up again, and after hours made a new high. I said 80 was a target. We reached 79.49, 79.53, 79.90. Yeah. 79.90. So 10 cents start at my target, and it's coiling or wedging, forming a little flag perhaps. My target now is at 81.90 there, about another 2.5 points. And we may get it this afternoon. And that's the kind of stuff you'll see on nonstop at the TechTrader.com. I'm always coming up with new ideas. Late in the day today, one of my favorite day trades, AEHR. I see the stock edging higher and higher, higher. And when it broke out right there, I put a day trade on. I said momentum is accelerating, so the volume all went long around 685.90. 7 or 8 minutes later, it's 822. It pulled back and tested the VWAP, and now it's flying at 885. I told them all that before I left, watch out for a move to may get it up to 9, even 9.5, something like that. So that's my current target. Yeah, we're almost to 9 right there. 8.99 just tagged. What a move in this one. You know, once they get going, folks, the momentum is strong. Here's now 9:04, 9:05. We're live. That was a beautiful wedge. There was one little dip to the VWAP, but other than that bar, which was a reversal bar anyway, this is a very bullish wedge pattern. Now I'm a seller. If I'm in the stock down here at 7.5 and I see 9:05, see ya. And the volume is going to be lower because it's after hours. But it doesn't mean momentum is dead on this one either. And you might see this. It might reach 9.5. But is it worth the risk watching the stock go from 740 to 909 that quickly, $1.75? Take the profit. I always tell people, so what if it goes higher? Nail down your profits. So anyway, that's what. So I'm always looking for positive divergences. I want to see things that are telling me that the stock is maybe drifting down, but the underlying technicals are holding up very well. If you take a look at here, we've got very quiet above the moving averages, low volume ebb, but the technicals were improving right in here, indicating to me the stock's on the go again, and it certainly did. Now they got negative here after a couple of down bars here, but it never broke support. That was support right there. Why? The prior high, when broken, is always support on the way back. Notice how it flagged along that level and broke out and coiled and popped and flagged. And then went vertical. Beautiful chart. And if I draw these lines correctly, look at your new angle. Look at that. This is why I would look for the possibilities. That even if it pulls back to there, it may hold it. Let's see if it sets up a little flag and then moves higher. I'm going to go out on a limb and say this might be between 960 and 10 by the end of the or after hours. We'll see. It's going to be some profit taking too, of course. Okay, so we talked about moving averages, the volume buzz indicator, the VWAP, which is important. When I like the balance of power and money stream, particularly on daily charts, this always indicates to me whether a stock is continuing to run or not, and what kind of underlying technicals are confirming the trend or not. And it takes time to learn how to interpret it. But anytime you see an explosive movement and pullback, you always want to keep an eye on volume and unbalanced volume to see whether it's legit, powerful or not. Now, in this case, I want to point out an example of something that I found when it popped out of this wedge. We went long big time. I mean, it's $7 from Blinn, and it went from 7 to 14 in a flash. 14.38. Got everybody out there, and it backed off. So that's the point, getting out, not just getting in. You got to know when to get in and when to get out. You got to know when to hold them and know when to fold them, of course. Finally, I want to talk about what I call technical divergences. I think that money stream, balance of power, volume have to be confirming the trend at all times. I want that to occur, consistently. And if I'm not seeing it, I'm going to have a problem with it. The problem being that if I see technical divergences, let's just talk about indices too. Yeah, I'm not sure if you can see this. David, are you there? Can you see this?
Yeah, I can see the looks like 6 different.
Okay, so you can see this is my market minder window.
Yeah.
And what I'm going to do is block out everything except I'm going to block out the charts and show you what the indicators are. Something I follow religiously is up-down volume and advanced declines. And that's, by the way, for those of you who don't know, the Mclaren Oscillator consists of just that. Advanced declines and up-down volume. So you can have a market that continues to go up, but if the breadth is narrow, the oscillators are not going anywhere. For example, the value of the Mclaren Oscillator is imperative. I've told everyone in my group, look, the market looks dire, but so what? We're at a point now at minus 200. This is the lowest level reached. Minus 203 was reached on Monday. And it was reached on a gap down and a gap up. When you see that, this is called an island reversal. It's always very powerful. But more importantly, look historically back. Only a couple times did this thing get below 200. That was at extremes. So in many occasions, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever. 10 occasions in the last 3 years, the oscillator for the Mclaren Oscillator got down minus 200 or worse. Always an indicator of an oversold condition and for a market rally. And look what we got the last 2 days. That's exact. And look at this. Gap up twice in a row on the oscillators. I never see that. A very strong indicator. I mean, you really got to look for 2 consecutive gap ups. Here we had it back in November, gap up, and it kept going. And that's what I think is going to happen here. This market's not done yet. And I also think the the small cap stocks, which have gotten crushed, may be coming back famously here. So stay tuned. It's going to get interesting. The other thing I follow is the VIX, obviously. And the VIX is never really oversold. In other words, it's never at a point of apathy where the market is dangerous until it's down in that zone in the 12, 10, 12 zone. You can see how it stayed there for a long time before the market crashed and they got to extremes. Now the upside extreme, quite frankly, is 40 to 50. On occasion, you'll get 80 or 90. But for the most part, anything up here in that zone is where fear rises and the market panics. It's not happening yet. We had 1 day up and then 2 days right back down again. The VIX went from plus 25 to under 18 in a day and a half. And what that did is kill the UVXY and some of those ultra short indicators. The UVXY, for example, exploded and imploded. It gave it all back. But I put a day trade on here at 28 breaking out, and the next day in the low 30s when it started to pop, and eventually 38.75 within a day on this one. But where is it now 2-3 days later? 10 points lower. So the VIX indicator, which I showed you, popped dramatically and pulled way back. And the Mclaren Oscillator, which got to oversold territory down here. I mean, look at these 1, 2, 3, 4 points, all around 200, give or take 10 or 15 points. Each time, rally, rally, this, and then a sharp rally there too. One of the reasons I'm concerned about the market overall is because these spike ups, overbought indicators got lower, 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 and lower. I'm just thinking that the market showing a deterioration in underlying technicals, and I wasn't surprised to see it roll over here. But with earnings season now, and with the Fed cooperating, I don't know if the market's going to collapse yet. We'll see. I'm always concerned, and I do publish a list called Box of Shorts, folks. There's some ugly stocks on that list. One of them got creamed today. This is not my list. I'm not sure what happened to it. I'll have to revisit that. Okay, folks, here's the bottom line. The market is full of technical indicators, and there's hundreds of them, but I believe in using certain ones that really help me. Moving averages are imperative. Crossovers are imperative. The Volume Buzz indicator every morning is really killer technical indicator. The VWAP, the volume weighted average price during the course of the session, is something I think is very good for intraday trading when you're looking for support and resistance. And for confirmation, the unbalanced volume and balance of power and money stream are excellent indicators for confirmation of a trend. The oscillators, such as Bollinger Bands and VWAPs, which is similar to the Bollinger Band, again, show you overbought, oversold, and are good indicators when a stock may be a buy intraday, particularly if it's near a support level and it's oversold. The technical divergences that I wanted to show you are the keys to, I think, longer term trends. Intraday technical divergences happen as well, but I'm talking about one of the divergences that very few people really are that aware of. I mean, I know that people follow it, but I follow it religiously. I don't like when the S&P makes a new high and the NDX doesn't. I don't like when the NDX makes a new high and the S&P doesn't. I want confirmation, even from the transportation and the small caps. If they're not all in unison, something's wrong. And usually, if you looked at the transportation index, I think you'll find something amazing. The transportation index has been coming down for 2 months. It spiked to a new high back here, broke down here. Moving averages crossed over negatively, and it's in a downtrend. Yes, it's back to the channel top, but if it doesn't break through, it could lead the market lower. This is basic Dow theory. If the transportation index isn't confirming the industrials, let's look at the S&P as the industrials for now. Notice the S&P 500 making higher highs and then snapping back off to 50. Beautiful rally off to 50, folks. Right there. I'll tell you right now, if the S&P 500 takes out 42.33, you can phone in the next few weeks because it's going to get ugly. Right now, I'm thinking that the indices have proved themselves with this little 2-day rally. Question is, if it doesn't get back above the high, does it roll over? Carefully watch the S&P 43, 93, 94 range. We get through that, we're looking much higher potentially. Wouldn't shock me if we went 4,500, even 4,600 on this move up. Watching the intra-market divergences and convergences, you can see that we came down to the prior line, it would look like a trend line, channel bottom, and bounce sharply. But is this a little left shoulder, head right shoulder? Well, if the market comes down tomorrow and then takes out the neckline, we're going lower, probably to 14, 13.8, and maybe much lower than that. If it breaks, this is the intermediate trend line, and this goes back almost a year. You break that, you're going to have a lower market. So we'll be watching a lot of these indicators as we go along. Intermarket divergences, inter-index divergences are more important. I want to see VWAPs, balanced and power, unbalanced volume, oscillators, technical, all these volume buzz indicators, all confirming the market and confirming individual trends. But and by the way, the individual patterns that I use every day, usually swing trades come from stocks that I had as day trades that became so strong they broke through key resistance and they're on their way to much higher levels. And we can show you dozens of examples. Believe it or not, a conservative stock like Alcoa, when the market broke out right here is where I put that a long-term swing on it. That was in May at 9, and it's gone from 9 to 45. 400% increase in a year. And Alcoa, it's not even a tech stock. So, I mean, I can show you a dozen examples of stocks that I put out that did wonderfully over the last years. Another one was USCR, which has been recently taken over, US Concrete. It's the same thing here. V bottom with the platform broke out there. That's where we put a swing on it at 20. It ran to 75, 80, 79, and then backed off, popped 2 weeks ago on a takeover, or a few weeks ago. So that's it for my presentation today. I would implore you all to come visit us at thetechtrader.com and sign in for a 10-day free trial. And I mean for all our services, the trading room, the charts of the day, the weekend webinar, everything, and decide what kind of trader are you and what kind of service you'd like to have. But I think once you come into our room and find out the intelligence and the willingness to collaborate for a lot of the traders in my room, and even be mentors if you're a newbie, I think it's the place to be on the internet, quite frankly. And I invite you all to join us at thetechtrader.com, and look forward to seeing you there. Thanks for being here. And David, thanks for inviting me. I'll take some questions if there's some time.
Yeah, we got a few minutes left. So yeah, if anyone has any questions, just type them in the chat. Are you able to see the chat, Harry?
No. You know, if you want to repeat a couple of questions, I'd be glad to answer them.
So someone asked, how do you know if the market will go up or down when it opens? Do you track SPY to tell whether to buy or sell?
Nope. For me, everything matters. The first 15, 20 minutes will tell me what the market's going to do usually. If we gap up and run and or consolidate, we do not want them to break the opening prices. If they do that, then the trend could change quickly. I watch a combination of factors. I want to see the technicals, the advanced declines, the up-down volume, how strong, how powerful the opening thrust is, or either way on the downside as well. And whether market-wise, whether the indices are above or below support, and whether they're trending intraday and starting to show channels and, you know, with rising moving averages and positive technicals. That's what I watch.
Okay. And do you trade futures intraday?
No, I don't trade futures intraday or options, but a lot of the people in my room do trade options on my swing trade picks. When I put out a swing trade, they immediately look at where the options are, and they, I'm told, do very, very well with a lot of my picks. If you look at my swing trade picks, some of them were mind blowers. For example, SAVA in January, SAVA, I'll show it to you real quickly. SAVA. When I saw SAVA a falling wedge here and then pop and pull back, this is where I put a swing on it at around 990. You can see how quickly, literally in about 2.5 weeks, from 990 to 117. Now that's unusual, but it was definitely a spec traded swing pick. Now with the pullback, we traded it today and got 20 points on it. Actually, today's a new all-time closing high for Saba at 116.70, or at least after hours, it's 116.70. Yeah. So I follow religiously certain indicators that I've been following for, I've been doing this for over 50 years, folks. So I think I have a bit of experience in the markets, and when it comes to technical analysis, I'm pretty good at it. Any other questions?
And how do you size your trades?
That's up to your portfolio. I mean, if you have, I always like to keep a maximum of 5 stocks in my at any one time, no more than that. And I always will do 20%, 15, 20% in each, and leave always 10 or 15% in cash at all times. That's how I size it.
You do basically an even amount for each trade?
Yeah, even amount, but I won't do odd lots ever. In other words, if I'm a few thousand here, a few thousand there, it's not bad. But from a money management standpoint, you don't want to rely on 1 or 2, because the 1 or 2 could go against you. If you have 4 or 5, you're bound to have 2 or 3 good winners. You can always chop the losers off and ride the winners up. Rule number 1, sell your losers and let your winners run. And keep raising your stops. And when you get to targets, particularly with my guidance, you want to sell at your targets, at least partial positions. The other one is scale in, scale out. You don't need to buy. You want to buy 10,000 shares or something, you'll buy 3,500, 3,000, that type of thing, as it moves up or down, depending on where support and resistance is and where your targets are. And same way it's selling. I sell on scale outs. I have targets above at all times. I know where resistance is. I know where my targets are. I put them in a second. I put a buy order in. I put my sell order in. I let the market come to me. If I don't like what I'm seeing, I sell at the market, period. I don't care about nickels and dimes, ever.
And Sunny Harris, who did a presentation for us yesterday, was in the room, and she said, "This is how a real trader trades. Harry is one of the best."
Yeah, I know Sunny, and she's a doll and an excellent trader. Knows her stuff. Thank you, Sunny. I guess that's it.
Someone said they're trying to sign up for the trial, but it's asking for a password. I think you have to click through to the register as a new, or I think the password is that you type in a new password.
Yeah, you have to type in your own username and password to sign up, right?
Yeah. Let's see. I think that's about it.
Anything else?
Someone asked if you trade in the pre-market. I think you talked about that at one point.
When I see stocks every day running like crazy. Today's idea was CEMI, and for example, pre-market, it exploded from the get-go right at 4 last night. This is last night, and this is this morning. Oh, that's right. This was last night at the close. It ran up and then it coiled, and then in this case, it wasn't a great trade pre-market. It was just consolidating. I was waiting for the breakout, and I bought it after the opening. But many times we'll trade pre-market runners when they're having really good pre-market patterns. For example, in this case, Saba ran up, broke out right there, and from that point, about a 92, it made it up to 96.79 for 4.5 points, even before the market opened. So that's what we said. And we got AEHR was running after hours, but if you take a look at it where it was pre-market, it really didn't do anything, and then it broke out and ran up. Here's where it was. Okay, it actually spiked up pre-market and then pulled back down. So anyway, folks, that's it for me. This is HB signing off. Harry Boxer, the technical trader, and please join us. I think the 2-week free trial will amaze you. The people in the room and the way we've structured it is extremely educational. They say that 2 months in my site is like 2 years in the classroom. So I look forward to seeing some new names in there. And thanks for joining me today. Thank you very much.